Welcome, my friends. If you follow this channel, you already know that layoffs are basically in full-on mode in technology companies. In fact, there has been so much layoff news that I have had difficulty finding time to cover anything else. You have heard about the 50% layoff at Twitter, the 11,000-person layoff at Meta, and the 10,000-person layoff at Amazon. And today we are hearing news that DoorDash has decided to cut employees. DoorDash CEO Tony Xu said that the company will lay off 1,250 employees. These will be corporate workers would be let go. DoorDash also announced a broader cost-cutting initiative and restructuring. I think that it is fair to say that this is one that everyone saw coming. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for technology companies? What does it mean for Silicon Valley? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Well, my friends, delivery service tech company DoorDash is cutting 1,250 corporate jobs. The cuts were presented as part of a continued cost-cutting campaign. Like many tech companies, growth has slowed or stopped. And this comes in the wake of overhiring during the pandemic. DoorDash CEO Tony Xu sent a message announcing the layoffs to employees on Wednesday. Shares in DoorDash rose 5% on news of the layoffs. I guess that just goes to show what Wall Street analysts want to see from technology companies. DoorDash joins the veritable parade of technology company layoffs. Amazon cut 10,000 jobs. Meta eliminated 11,000 employees. Twitter cut 50% or 3,700 jobs when new chief twit Elon Musk took control. HP announced the layoff of 6,000 employees over the next 3 years. Lyft cut 700 employees or 13%. Overhiring at technology companies exploded during the COVID pandemic. Now, they are living through the harsh comedown from those unreal realities. And you all know what I always say because I have said it so many times on other videos. But I am going to say it again anyway. By now, if you follow this channel, you already know the financial economic narrative of the times. Inflation is raging in most countries of the world. Central banks are aggressively raising interest rates in order to fight inflation. So, consumers are now faced with higher expenses for interest, food, and energy. And many are nervous about their job security. Because they keep watching YouTube videos that cover layoffs practically every day. So rising interest rates are muting both consumer discretionary spending and investor confidence. Like many companies, DoorDash announced a hiring freeze earlier this year. DoorDash entered 2022 with 8,600 corporate employees. And, I must add that 8,600 seems like a very large number of corporate employees to begin with. It makes me wonder what all of those corporate employees were actually doing. And, if DoorDash claims to be able to continue without these employees, why did they have them on the payroll to begin with? DoorDash had its initial public offering, IPO, at the end of 2020. If you recall from the time, it was a wildly successful IPO. Newly issued shares in the company soared 80% over the initial pricing. Almost exactly 1 year ago, the market capitalization of DoorDash hit a peak valuation of $81.1 billion. And all of this despite DoorDash never turning a profit. What a difference a year makes. DoorDash shares are down over 60% year to date. Wall Street investor sentiment has changed dramatically in the second half of 2022. Throughout most of the last decade, investors valued high-growth stocks. That included many high-flying tech companies that were never profitable. And that is especially true for the past 5 years. But the dramatic turn in investor sentiment just shows how fragile the market is. When it became clear earlier this year that the days of heady growth are over, then Wall Street analysts changed their direction and are now focused on growth of profits. And that is not good for companies that have never been profitable. That includes DoorDash. It also includes Uber, Lyft, and a boatload of other tech companies. It will be interesting to see what happens to all of these unprofitable companies in the upcoming months. But I know that you are all waiting to hear how many people Google will lay off. Also, if you follow this channel, you know that a major activist Google shareholder is demanding layoffs. TCI has made the case that compensation and headcount at Google are just way too high. Much higher, in fact, than at other companies in the rest of Silicon Valley. Google remains one of a few tech companies that has not yet formally announced major layoffs. Right now, Google employees are nervous. The search engine giant is implementing a new performance management system, according to the report. This could enable managers to start getting rid of underperforming employees beginning next year. One critic, billionaire activist investor Sir Christopher Hahn, claimed Alphabet's payroll was too high and should be dramatically sliced. Meanwhile, over at Twitter, that drama continues to unfold. Elon Musk has ordered thousands of layoffs, which were followed by mass resignations. The turmoil at Twitter has kept it in the news for the past few weeks. Critics are saying that it has seriously damaged the company's reputation and operations. But many observers believe that tech job cuts and hiring freezes were inevitable. Big tech companies experienced a surge in revenue and profits during the pandemic. That led tech companies to hire at a blistering pace. Now, they are experiencing the post-pandemic hangover. All of this while the United States teeters on the brink of recession. So far, all we have heard about is stealth layoffs at Google. And if you follow this channel, you already know that a stealth layoff is a quiet, individualized layoff. As industry-wide layoffs hit bigger tech names, Google workers worry they're next. While Google has so far avoided the widespread job cuts that have hit tech companies, particularly those supported by a slumping ad market, internal anxiety is on the rise, according to employees who spoke on the condition of anonymity. A month ago, in his strongest language yet, Google CEO Sundar Pichai telegraphed that layoffs are coming to Google. In his Q2 earnings call, Pichai said that Google's performance was far from good. He also said that Google is not performing as well as it should with the employee base that it has. If you follow this channel, you already know that Pichai gave a now infamous speech at the Vox Code conference in Los Angeles. At the conference, Pichai said that he is determined to make Google run on fewer resources as a slew of business challenges emerge. Pichai has set an efficiency improvement target of 20%. Even the crypto market is having a negative impact on Google's latest results. And the collapse of crypto exchange FTX does not help. There are widespread concerns about industry contagion. Actually, Google has already cut some employees around the edges. The next generation Pixelbook laptop has been cancelled. Funding for the Area 120 in-house business incubator was sliced in half. Digital gaming service Stadia was shut down completely. And employees are getting nervous about the possibility of more layoffs. If you follow this channel, you probably know that Google changed its system for employee performance reviews last week. And this comes at a time when the company is looking for ways to cut costs. But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.